Gary, thing number five, we're moving on to again our investor education series, or at least carving out one of the things to talk about investor education questions that our subscribers might have. So we do encourage anybody that may be listening, if you do have questions about investing, just in general, or anything that you've wanted to know, or just ask Gary, please don't hesitate to reach out to us and probably, or maybe there's a likelihood that your question will be displayed as one of the things on our show. Gary, thing number five, we're talking about the misconceptions that come around stock buybacks. So, thing number five, Gary, and again, question from one of our subscribers: what are stock buybacks and why do they matter? Thing number five, Gary.
All right, great question, Rob. Let's talk about what a stock buyback is. That happens when the management of a company goes into the market and they buy stock in the public market, in the stock market, just like you and I would. So if we were looking at a company and we said, well, we really like this company, we want to go buy stock. Well, guess what? The company can do the same thing. They can use their cash on hand or take on debt and go right into the market and they buy back their own stock, just like you and I would, as long as there's not, material news or too close to earnings or, ahead of a big announcement. And then what they do is they retire those shares, and those shares come out of the share count. They're just permanently gone.
And Gary, for those that might be unfamiliar with stock buybacks, does this tend to lead to increase or decrease in pricings? And is there maybe any other way that we can think of stock buybacks that we might be more familiar with?
So there are certainly exceptions to this, but in general, a stock buyback tends to make a stock go up for three reasons. One is signaling. Companies buy back stock when they have access to cash and they believe that their stock is undervalued. Taking the resources that you have and buying back your own stock is generally a signal to the market. We think our stock is undervalued. We'd rather buy this than buy someone else's business, than make an acquisition. The second reason it tends to make stocks go up is because there's buying pressure in the market, right? You have literally the largest shareholder of the company is the company itself, and they're in there buying, and they tend not to do that in small amounts. So, you have buying pressure from that. The third thing that happens is when those shares are retired, it affects your financial metrics. And so we're used to looking at things like earnings per share, which is the company earnings, the net income divided by the number of shares. Well, if you reduce the share count by, say, 10%, the math is that your earnings per share, your EPS, will also go up by 10%. And so, having a higher EPS, it tends to get you a higher stock price.
Gary, talk about two. Buybacks can tend to be more tax efficient. Explain why that might be the case, that stock buybacks can be more tax efficient.
Yeah. So let me just preface this by saying I am not an accountant. I'm not a CPA. I'm not a financial advisor. This is not, tax advice. And if you have questions on this, you should seek out your own professional advisor on this. I am about to give you a generality, but it's a pretty good rule of thumb on this. So when a company pays you a dividend, they say, okay, here you own stock, here's $1 of cash per every share that you own. And what happens in that situation is the company chooses the time that you get that. So you may get that dividend in December. Well, guess what happens if you get the dividend in December? You have to pay taxes this year on that, or, this upcoming April 15th. The other thing is dividends are typically treated like ordinary income. And again, consult with your own tax experts, but in general, ordinary income tax rates tend to be on the high side. And so you're probably paying more in taxes. Now, what if instead of using that dollar that they were going to give you for your dividend, they go into the stock market and they, on behalf of everybody, for every share, they buy $1 worth of stock. And that makes the stock go up. And say that happens in December. Now we have a couple of things that we can do. One, we can decide not to take that money and just own a greater percentage of the company, and terrific. The stock goes up and you're sitting on unrealized gains and your portfolio grows, and that's a pretty good outcome. But now let's say you say, wait a minute, I need that dollar. I want that dollar per share because I, have to go buy something or pay the rent or, whatever it is that you're doing. Well, the advantage of a stock buyback is you realize those gains only when you sell that stock, which means you have control. And so just as an example, if the company was going to pay you a dividend in December, they don't do that. They do a stock buyback and you sell some of that stock in January, you have deferred your tax bill by an entire year. It becomes a bill that comes due 1 year later. And by deferring that, you have access to that capital for longer. So that's a big deal. The other thing that happens is if you sell that stock, you will, assuming that you're up in the position, you'll pay capital gains taxes. And the reason that matters is if you have capital losses, you can use the gains to offset them and maybe not pay any taxes at all. But now let's say you have capital gains and you add to that and more capital gains, but long-term capital gains, if this is a long-term position, they tend to have lower rates. Again, consult with your own tax professionals. Your situation may be different, but in general, long-term capital gains taxes tend to be lower than ordinary income taxes. And so having a company return capital to shareholders through a stock buyback instead of through dividends tends to be more efficient. Now, there are definitely exceptions, and your situation will be different, may be different, but generally it's a better, more tax efficient way to return capital and reward shareholders.
A few more questions I had, Gary. Just from DKI's perspective or your perspective, do you generally see buybacks as a positive or negative sign for the stock?
Well, I like them for the reasons that we talked about. It gives shareholders control of when they recognize gains, of whether they can offset them, of long-term versus short-term treatment. I like when companies are confident enough in their future that they're saying our stock is undervalued. The future is going to be great. We want to reduce the shares outstanding. I think that's a great thing. Anytime there are more people buying a stock that you own, well, that's, great. It tends to make the stock go up. Now, there are people who have arguments against them, but I generally do not find their arguments to be compelling. So again, could a company misallocate capital to buy back stock? Sure, it happens. But in general, a stock buyback tends to be a pretty good place to look for value.
And on that point, Gary, of criticism, I know one of our favorites, Elizabeth Warren, has been a harsh critic of buybacks. But what are some of the criticisms that buybacks receive from other individuals or just those that keep track of the markets?
Well, let's deal with two of them, Rob. One, Liz Warren has called stock buybacks paper manipulation used mainly to boost executive pay. Other people claim that there's no long-term benefit because these are one-time transactions. This will not surprise you, but all of those arguments are just wrong. First of all, Liz Warren's claim that this is just paper manipulation to boost executive pay is complete and utter nonsense. The beauty of a stock buyback is it benefits all shareholders in proportion to the number of shares that they own. A CEO might be able to enrich himself at shareholder expense by saying, well, I need you shareholders to pay for my country club membership or private air travel, or I want, bigger bonuses or more cash. And that comes from shareholders to the CEO's benefit. But if they take that capital and they buy back stock, well, that benefits small shareholders, like individual shareholders like us. It benefits pension funds who own the stock. It benefits your grandma who has her money in a pension fund, or unions who have their money in a pension fund. And yeah, sure, it does benefit the C-suite, but it benefits all of us together. They cannot do a stock buyback that helps the CEO at the expense of individual shareholders. Also, the people who claim that there's no long-term benefit, that these are one-time transactions, that's factually incorrect. A dividend, and I'm not against dividends, but a dividend is a one-time transaction. When you buy back stock, those shares are retired permanently. So if you buy back 1 million shares, that is 1 million shares coming out of the share count permanently. They don't go back in. Now, are there other things that a company could do to increase their share count? Sure, nothing's fixed like that, but these are not one-time transactions. These are transactions where the benefits of them accrue to all shareholders in perpetuity.
And Gary, last question. Does DKI in any way look for companies that do buy back shares, or is that some sort of criteria? Or how do you guys look at that when you're considering a stock position?
It's not among the top 2 or 3 things that I look at. In general, my first cut is this a great business? And then I'm looking, at the future, the moats, the growth rate, the free cash flow. Those are things that I consider to be more important. With that said, in general, I like to see a company buying back stock again for the reasons that we've already spoken about in this segment. Um, it is something that I like to see. One of my favorite companies, Las Vegas Sands, they have been returning capital to shareholders for many years. The CEO and a former CEO and chairman, Sheldon Adelson, one of the reasons he was loved by investors was he was very shareholder friendly. The way Adelson paid himself was through dividends and stock buybacks. These were things that benefited all shareholders with him. And he made himself an absolute fortune. He was worth tens of billions of dollars, but he did it in a way that his secretary and the people in the company who own the stock and individual shareholders, we all benefited with him. Now, is that a guarantee that it's a good idea? Absolutely not. And I recently sold stock in a company where management was buying back stock, and I thought the stock buyback was great, but I didn't like the fundamental results of the company. So to answer your question, it is not among the top 2 or 3 things that I would look at. I'm not necessarily screening for it, but when I see it, I view it as a positive.
Gary, thanks so much for clearing up those things about buybacks. And again, if you have any questions that are related just to investor knowledge, research, any questions that you may have on the tip of your tongue, don't hesitate to fire them back in to DKI or IR at deepknowledgeinvesting.com, or just leave a comment with your question. That concludes, everyone, this week's version of the 5 things. Again, it was the government is misleading you issue. As always, we'll be back next week after the election with, I'm sure, lots of new insights and takes for the 5 things to know in investing. As always, and as we've mentioned, we love your support. Even a like, comment, share to your friends of this show would be incredible. Please also be sure to, at the minimum, grab a free subscription on the DKI website. No cost, but you won't have full access that premium members do have. Again, for that small nominal registration fee for premium, you'll get access to current recommendations, alerted with new content and material first, and obviously have 0 paywalls when you come to the DKI website. Gary, any final thoughts from you?
Yeah, just for everybody, thanks so much for watching. We really appreciate it. We know your time is valuable. The other thing is, definitely tune in next week. We got some huge news on one of our portfolio companies this morning. The 8K was filed right around 8 o'clock this morning. So that didn't make this version of the 5 things, but it will be leading off next week's 5 things. Definitely some huge news that I think is money-making news on one of our big portfolio companies. So we've already started work on next week's 5 things, and I like the way it's shaping up. So tune in. We will see all of you guys next week, and thanks so much for watching.